In my last video, we watched Micron cross the $1 trillion line, a memory chip company, a business most people used to think of as boring and cyclical, suddenly joining the most elite club in the stock market. So today, let's ask the obvious question: who is next? Most people will immediately guess another AI stock, maybe another chip company, maybe another cloud giant, and honestly, that answer makes sense. AI is still the biggest story in the market. But when you look at the actual numbers, the answer becomes more interesting, because the company closest to $1 trillion right now is not Nvidia. It is not Microsoft. It is not even a pure technology company. It is a drug company. Let's break it down. A trillion-dollar company used to sound almost impossible. Apple became the first US company to cross that line back in 2018. After that came Microsoft, Amazon, Alphabet, Nvidia, Meta, Tesla, Berkshire Hathaway, Broadcom, and now names like Micron. The club is getting bigger, but it is still rare. And because so many of the biggest winners have been technology companies, investors started to believe one simple story. To become a trillion-dollar company, you need to be a tech rocket. But that is not fully true. There are actually two roads to 1 trillion. Road 1 is the exciting road: hypergrowth. Revenue explodes, profit expectations explode, the stock gets re-rated. This is the Nvidia story. It is also the AI chip story. When the market believes a company is sitting at the center of the next computing wave, the valuation can move very fast. But road 2 is quieter: scale, cash flow, and compounding. A company does not always need explosive growth to become a trillion-dollar business. It can get there by being huge, profitable, durable, and boring in the best possible way. Banks, payment networks, energy giants, retailers. Remember, market cap is just share price multiplied by the number of shares. A giant company with steady earnings, buybacks, and moderate growth can keep grinding upward for years. That is why the trillion-dollar race is not only about AI, it is about where the market sees the most durable profit pools in the world. So let's count down the companies closest to the line. Number 6 is Exxon Mobil. This is as old economy as it gets. Oil, gas, refineries, massive infrastructure, massive cash flow. In a market obsessed with artificial intelligence, Exxon looks almost out of place in this conversation. But that is exactly why it is interesting, because AI still needs the physical world. Data centers need electricity. Electricity needs generation. And the world is still consuming a huge amount of oil and gas. Exxon is not a hype stock, it is a cash flow machine. The bull case is simple: global energy demand stays high, capital discipline remains strong, and Exxon keeps returning money to shareholders. The risk is also simple: energy is cyclical, oil prices can fall, margins can compress. So Exxon is not the most likely next trillion-dollar company, but it belongs in the race. It represents road 2: scale, cash flow, and patience. Number 5 is Visa. Visa is not a bank. It does not lend money like a traditional bank. It is closer to a toll booth on global payments. Every time someone taps a card, buys something online, or moves money through a payment network, Visa has a chance to collect a small fee. Small fee, massive volume. Visa has one of the best business models in the world: high margins, global reach, strong brand trust, and a network effect that is very hard to replace. The bull case is that cash continues to shrink, digital payments keep growing, and Visa keeps taking a tiny slice of a gigantic global flow. The risk is that new payment rails, regulation, and fintech competition keep pressuring the model. Visa is not a rocket, it is a toll booth. But toll booths can become very valuable when the whole world keeps driving through them. Number 4 is JPMorgan Chase, the biggest bank in America, a financial fortress, a company that sits at the center of deposits, lending, investment banking, trading, payments, wealth management, and corporate finance. JP Morgan is not sexy in the same way an AI chip stock is sexy, but it is powerful. When markets panic, money often flows toward the strongest banks. When companies need financing, JP Morgan is there. When consumers, institutions, and governments move money, JP Morgan is somewhere in the system. The bull case is scale and trust. JP Morgan has a balance sheet that smaller banks cannot match. It has deep relationships with corporations and institutions. The risk is the economy. Banks are tied to credit cycles. If consumers weaken, defaults rise, or interest rate conditions move against them, the stock can suffer. So JP Morgan is another Road 2 contender. Not explosive, not flashy, but very, very hard to ignore. Number 3 is AMD. Now, this is the name most people expected to see. AMD is the pure technology contender in this countdown. It is the company investors look at when they ask, who can take even a small piece of NVIDIA's AI chip dominance? That is the key phrase, even a small piece. Because the AI accelerator market is so large that AMD does not need to beat NVIDIA to become much bigger. It just needs to become the clear second winner. If NVIDIA owns the premium AI chip narrative, AMD owns the challenger narrative. The bull case is huge. More AI data centers, more demand for GPUs, more customers wanting a second supplier, more pressure from cloud companies to avoid being locked into one vendor. The risk is equally clear. NVIDIA is not standing still. Its software ecosystem, developer mindshare, supply chain relationships, and roadmap are extremely strong. AMD has to execute almost perfectly. So AMD is Road 1, hypergrowth, AI demand, and a big valuation bet on the future. Number 2 is Eli Lilly. This is the twist. The company closest to the trillion-dollar line is not a chip company. It is not a cloud company. It is not a social media platform. It is a pharmaceutical company. Eli Lilly has become one of the most important companies in the world because of the biggest health trend in a generation: diabetes and weight loss drugs. Mounjaro and Zepbound turned GLP-1 medicines into both a medical story and a market story. This is not just about people wanting to lose weight. The bigger question is whether these drugs can reshape treatment for obesity, diabetes, heart risk, sleep apnea, liver disease, and other major health conditions. That is why investors care. The potential market is enormous, and Lilly has something rare: a growth story that looks almost like technology, but in healthcare. The bull case is that GLP-1 demand keeps expanding, supply improves, new formulations make access easier, and Lilly builds one of the largest drug franchises in history. The risk is pricing pressure, competition, side effects, manufacturing constraints, and patent life. Pharma can look unstoppable until the market starts worrying about regulation or competition, but by the raw math, Eli Lilly is the front runner. If you are asking who is closest to the trillion-dollar line right now, this is the name. Here is the thing. Look at the list again. Eli Lilly, AMD, JP Morgan, Visa, Exxon Mobil, healthcare, semiconductors, banking, payments, energy. Only one of the top 5 is a pure AI chip company. That does not mean AI is over, not even close. It means the market is broader than the AI story alone. The next trillion-dollar company could come from medicine, it could come from banking, it could come from payments, it could come from energy, it could still come from AI. The trillion-dollar club is starting to look less like Silicon Valley and more like the global economy. Now, a quick sanity check. Crossing $1 trillion is a headline. It is not a guarantee of future returns. A company can cross the line, fall back below it, and cross again later. Market caps move every day. Sometimes the difference between 980 billion and 1 trillion is just one strong trading session, so do not treat the milestone like magic. The real question is not just who crosses 1 trillion next, the real question is who deserves to stay there. That requires earnings growth, pricing power, execution, and a story the market still believes in. So here is my take. By the numbers, Eli Lilly is the cleanest frontrunner. AMD is the most exciting AI challenger. JP Morgan is the financial fortress. Visa is the quiet toll booth. Exxon is the old economy cash machine. But if I had to pick the most interesting name, I would pick Eli Lilly. Not because it is risk-free, it is not, but because it proves the bigger point of this video. The next trillion-dollar company does not have to be another AI stock. Sometimes, the next giant comes from solving a very human problem: health, weight, diabetes, longevity, quality of life. That may be just as powerful as chips and data centers. This is not financial advice, it is just the data and my read. Now I want to hear from you. Who do you think becomes the next trillion-dollar company, and who did I miss? Drop your pick in the comments, and if this changed how you see the market, subscribe. The Trillion Dollar Club is only getting more